Hey guys, Mike here. So another big week ahead for us, and we'll go over all the earnings, which there's a lot, and economic data, which is a lot as well, to wrap up February and stuff before we start running into March. But we're also going to dig into a group of stocks to watch out for because there's a lot of technical support. So it's going to be a complete technical bounce if this group of stocks gets it. And a lot of people think that's what's going to happen. Also, we're going to dig into the IWM or the Russell 2000 small caps because something very interesting has been happening and it could affect where this one is going because a lot of people, as you'll see, they're trying to play on small caps because how far they're still down from their all-time high versus all the other indexes, right? And so I did want to show you this, and it's something that it really surprises you unless you're in the stock. I think it surprised me. And, congrats to whoever's in it and everything. But I always like to at least update you once a week when we get this about the weekly flows and where they're going from the funds. And you can see last week it was small caps kind of led the way, 3.7 billion. They went into large caps as well. That would be because of Nvidia. You can guarantee that. Also, you got your bonds where people are rolling into. No shocker there. And so, I'll at least put this out once a week so you can see where large sums of money are trying to rotate into and everything and play the bet. Now, this one surprised me. Let me know if you're in this stock. ANF, right? Abercrombie and Fitch, they make clothing. This thing is up 350% in the last 12 months. So congratulations to whoever's in that one. I wish I was, but I am not. And boy, look at that. And that's just right there. The last 448 days is up 439%. Look on the weekly how long this has stayed oversold. You'll find hardly any clothing company I think has ever pulled this one off. Up 643% since October of 2022. Why is this? To continue the education, like we do like to do on this show. And I was like, it's got to be something up with this. And what is it? It's the freaking float again. Look at this. Another small one, right? Just like SMCI. Just like the other one I showed you on Thursday, small float, short squeeze, and when that happens, they can just keep pushing this thing up. And this is what I was talking about with SMCI. This is what's happening with SMCI. Now it's done this big move up. The calls, right? They're buying calls to push it up. You see this person, they post this. This happens every day, and you'll see it. They're up thousands of dollars, and then they'll ride it down with puts again, forcing the market makers to help them push these kind of stocks up, right? So this is the same thing that's happening to Abercrombie and Fitch. It's happening to SMCI. It's happening to other stocks. And so that's what you're seeing going on. And the most important thing to get out of this is, what does that affect? It affects the Russell 2000, the IWM. And why is that so important? And guys, before we continue, if you could hit that like button for me, I sure would appreciate it. It helps people find this video and everything. And also, if you like the content, think about subscribing, guys. Because as we can see, the Russell is down about 18% from all-time highs. It was down about 27 before we started, this run back in November-ish time frame. And when you look at this thing, basically what's it still doing? It's still wedging. But the important thing to understand is what's been happening as we dig into this, okay? So again, still wedging in this very small range right there is what it's doing. It's even in a smaller range we're going to go over in just a minute. We can look at why. And so again, like a 5% range you're setting in probably the last month and a half. Still hadn't eclipsed the 2023 high, even though all the other indexes still have. You don't have any kind of bearish divergence on the RSI or anything going on. I mean, it's basically falling like it's supposed to or whatever. But what's interesting about this is now that you've seen SMCI and some other stocks we're going to talk about make these big moves up, the question is, can this continue to go up, or is it just going to start trading sideways or break down again? And why am I saying that? One, obviously we have this formation here happening here, and so we have to wait to get the 2023 high to see if it's going to break up or break down. But when you pull up SMCI, what'd you see? When did it start to move? Started to move on January 17th. That's when the Russell started that big move up, okay? And you see this right here. I'm not talking about the November move. I'm talking the most recent move where it really started to go, right? But now what are you seeing? Well, now all of a sudden it's made that crazy 300% move up. Now it's stuck in like a 33% range, right? Even if it goes all the way to 1100, 1200, whatever it is, it would have to go all the way to like 2000, right? To make that kind of crazy move again. Well, you look, wow, look at that right there. Same dates. That's when it started to move up. And now all of a sudden, since SMCI is stuck in this small range, what have you seen the IWM done? It's been stuck in this small range. Here is why that is. Here's why it's so important. And I'll be honest, I never thought I'd see this in Russell 2000 because of as many stocks as it has and how it weights it. But SMCI accounts for 1.8%, but you'd have to add up the next 5 stocks to equal that weighting, right? So when it goes up this crazy amount and triples its market cap, That's why you see the effect it had on IWM. So now that it's had this crazy move, unless it keeps going to like $2,000 or $3,000 a share, it's going to be hard for it to contribute that much to it. And there's really, I mean, at this point in time, in a way, more downside than upside, right? Or at least sideways type of movement. And you've seen some other stocks like Mr. Moving up MicroStrategy because of why? Because of Bitcoin, right? And so there, January 23rd, boom, it takes an 82% move. But again, it's only weighted at like 0.39. And so it doesn't have that same effect. But when you get ELF and Mr. and all these others moving at the same time like that, having these huge moves, that does affect the Russell. And now they've made these big moves. How is the Russell going to respond now? Because if you know, SMCI, that's heaviest way to get stuck in this range where they're just trading it up and down between, let's say, 700 and 1100 or 1200, somewhere in there. What's it going to do? So far, you've seen it just basically trade almost sideways in the very like 2% range right now, right? And so if Bitcoin cools off, starts trading sideways or coming down or whatever, that's going to affect MSTR, and there's going to be other small caps as well. And so that's really the big question. Are, because of these massive moves up, are people going to start profit taking, right, on Abercrombie Fitch? Because that's a crazy amount. You'd be crazy not taking at least some kind of profits, right? And plus they have earnings coming up, I believe it's the first week of March. So that's going to be a very interesting earnings. But again, you see why those stocks can move like they do, right? And so that's really the big question on small caps. And it's important to understand that if you're going to be trying to go heavy into that, expecting it to go 17, 18% up and reach the all-time high, you got to have those stocks moving, right? You got to have them. And so, or you're going to have the other, 17, 1800 stocks start really moving up with them. And so that's the thing to think about with that. Now, Nvidia, obviously, king of all, right? So, of course, after reports earnings, has the biggest post-earnings rally in history, right? No shocker there, $277 billion. I mean, that is nuts. I mean, we thought Meta was huge, right? It put Meta to nothing, almost 100 billion more. Isn't that crazy? But that's a new record. Like we get to see, year first, 3 years the first, whatever it is. You get to see all these things you'll remember for the rest of your life, probably. But again, when you look at this one, I'm breaking up, exchange traded hours, like where is this going to go, right? It's been following the call volume. They've been loading up in calls, and then they load up in puts and pushing it down, pushing it up. But again, that's going to be a level to watch around that 750 area, 747, I believe it is. But what I'm looking at is, okay, where's the liquidity draw? Because it's at all-time highs. So you have to figure, okay, you have to have more buyers and sellers, right? You have to pull people in. And what I look at when I pull this up, that's why I'm pulling up ETH, is, okay, where are these fair value gaps at, right? Because that's the imbalances of the buyers and sellers, right? Also, this trend line has been forming since the 24th of January right there, okay? And so as that moves up, you can see that's where we're getting our rejections off of. Again, something to look at. So you can see this thing move up to 840 before you see another rejection. Maybe move down, mitigates that big fair value gap right there to pull more buyers into the market. AMD, what are you seeing? Just a rectangle. Pretty much this range of around 164 to 184. And so that's where we've been since January, coming into the end of February here. Do we finally break out or break down is the big question. And again, when I pull this one up on regular trading hours, it loves to fill the fair value gaps. It loves to fill the RTH gaps. When you have it on regular trading hours, you can see it almost fills them to the penny a lot of times. But then when we go over and pull up the extended trading hours, you can see what this is doing in pre-market and how it sets up and everything. So the question is it going to pull up, mitigate this other fair value gap here before pulling down, try to get more liquidity, or do we finally move up, break the all-time highs, come back down, retest the old all-time highs? The question. And again, I've pulled this right over, you can kind of see, you see all these fair value gaps that are created in hours that you're probably not looking at, right? Pre-market, after hours, that kind of stuff, and it loves to mitigate them. You just don't see it happening, right? These are all these liquidity draws in after hours, trying to keep this thing moving up or sideways and all that good stuff. So always pull up your ETH if you wonder, because you'll see bounces and you don't understand why it's bouncing somewhere. That's why it's bouncing. So keep that in mind. Now, looking at Tesla, again, to me, it's in this broadening wedge. Some people say it's a bull or bear flag, excuse me. Maybe you want to call it that. I just call it a broadening wedge. It keeps broadening out. And so we're at the bottom of it. So it's very simple. We're either going to get the bounce, head back up, finally mitigate the entire RTH gap around 207, then it moves to around 210, 215 to reach the top of that, or we're going to end up obviously breaking down, heading back down toward these fair value gaps between that range of 180, 188. Obviously, EVs have not been good. They've been getting trounced. And so this is the big thing to watch. But again, I'm still waiting on a lot of call volume to come in. All those call sweeps, I still have not seen it happening yet. That's how Tesla moves. And now that leads us to a group of stocks, which I touch on because a lot of you guys are requesting my stuff. Again, these are not stocks I would ever on long term, but I'll trade the breaks off of them. And understand, a bunch of them just coincidentally, wink wink, are coming into a lot of technical support, and that's how stocks trade. Okay, and their fundamentals aren't bad either, by the way. I mean, actually, they're way better than American stocks as far as thinking them as expensive and everything. But it's Chinese stocks, wink wink. And so when you look, what do you got? BABA's coming up in this inverse head and shoulders right here, getting a technical bounce off support again until it breaks that trend line. It's all for nothing. But it's not just BABA. When you come over here and look at JD, this thing's coming into major support and bouncing, right? Look at all those times it came down here, 2014, 17, 19, and here we are again, and it bounced, okay? What else? Look at JD. Here's the trend line I'm going to draw in here. Again, this is kind of like BABA. It can move up here, which is a really nice big move, believe it or not, from 23 to like 38. But until it breaks that, you know, just enjoy the ride up if it gets there. The other one, Baidu, again, coming into major support. Has been there for years. You can see about all the areas of all the bounces or where it was resistance or whatever you want to put on here. But again, major support. So you got all these stocks that everybody knows that's coming into support and they're bouncing. Okay, what does that usually mean? You either get a short-term bottom or a permanent bottom. That's what everybody's looking at. Again, pull up the Hang Seng Index. This one's been moving up pretty nicely. And you can see it didn't set a new lower low, which is good, up 15% since it hit that line right there and started to bounce. But again, the major trend line is the big one. So it needs about another 4% move before it hits that trend line. When it breaks that, that's what you need to be watching out for, especially these stocks, because that's how this one is. It just gets these major declines. And I mean, look at it, even during recession, it keeps going after the recession. That's how this one is. Their stock market is hot garbage. It is a mess. But when it breaks up, it breaks up. Okay, and so it just so happens you see all these other stocks, which make up that index, coming into support and bouncing. Okay, I was looking at this and I pulled the RSI up. I wanted to see if there was any bullish divergence, but there's not. And other times when this is bounced, when it's been trading down like this, you'll get a bullish divergence. And so I didn't see that here, which, you know, doesn't mean it has to have that or anything, but I just like it'd be awesome if it did, but it does not. And so, you know, just watch for that. Watch for that group of stocks. See if money starts rotating in there. Okay, now, looking at the earnings, a whole lot of high beta stuff going on here, and a whole lot of consumer stuff. All right, you have Li Auto, obviously, you've seen EVs get destroyed, right? Unity, Zoom, Workday, Hims or Hers, iRobot's going to be another one, right? Then we'll get a travel stock in Norwegian, and then we're going to have the stuff to deal with the consumer. AutoZone, Lowe's is going to be something people are watching out for. Obviously, Home Depot has not done well. Macy's, then you have Devon Energy for solar. Let's see what else we got here. Beyond Meat. Wow, look, that one's still in here. Lemonade, Splunk, Virgin Galactic, still in business, by the way. Then you go over to Wednesday. Here's one of the Chinese stocks right there, right? Then you're going to end up going into Advanced Auto Parts, TJX right there. And then we're going to come over here and you end up with Marathon, Snowflake, Salesforce, AMC, C3AI, Okta. Oh boy, that's going to be an interesting day right there. Then we're going to go with Celsius, which has been just running like crazy. Then you look over and we'll have, I can't believe Best Buy is still in business, but it is. We'll see what they got to say. Then you end up with SoundHound, which everybody's talking about. That's one of the companies Nvidia actually got into. Fisker, Dell, Autodesk going to be another one. And then look at Friday, Plug and Fubo. Yeah, that's definitely, a lot of people going to be playing those earnings. I'll bet money on it. Then when you look over here at what's going on economically, the data coming out. Monday is not going to be too bad. You'll have a lot of stuff, a lot of mortgage stuff and home data stuff coming out this week. So new home sales month over month, Dallas Fed manufacturing. Then Tuesday, you're going to end up with, you know, Red Book information coming out. Again, a lot of housing data, S&P Case-Shiller home price index. So a lot of stuff going on there. Richmond Fed manufacturing and services, and which the market don't seem to care about. And then Wednesday, you end up a lot more mortgage data, but then you'll have core PCE prices quarter over quarter, GDP growth rate quarter over quarter right there, GDP sales, and then PCE prices quarter over quarter. I don't think that's going to affect too much. We'll see. We'll see what they feel about it. I mean, the GDP is supposed to drop. Forecast 3.3, prior 4.9. So that will be interesting. Then you'll have retail inventories, ex autos, wholesale inventories. And then we'll have oil data coming out at 10:30. And then the Fed speakers start to roll out Wednesday through Friday. Again, we'll see what message they're trying to send to the market. Then you get your jobs claims data on Thursday, core PCE price index month over month, year over year. You can see they're actually expecting an increase over the month over month, but a decrease in the year over year. And then PCE price index month over month, and year over year. They're expecting an increase in the monthly, decrease in the yearly. Personal income, personal spending. Chicago PMI is coming out, so we'll see if that actually gets out of contraction or not. Pending home sales, a lot more home data, a lot of Fed speakers. Kansas Fed Composite Index, manufacturing coming out. A lot more Fed speakers again. And then Friday, we'll end up with S&P Global Manufacturing coming out, construction spending, ISM manufacturing, all kinds of stuff with ISM. And then Michigan Consumer Sentiment will come out. And so as you can see, I don't know if there's like one thing in there that will really affect the market, but it's definitely going to cause it to be extremely volatile. Because we're at all-time highs on all these indexes, you're going to see a lot of intraday, like really fast drops down to try to pull liquidity to keep that party going. Okay, you got to have the buyers, you got to pull them in. And so that's what you saw last week. I don't know if you noticed, like once we started actually going into the all-time highs again, all of a sudden you just see a fast move down within 2 or 3 minutes, and then start to move back up. And so that's what, again, you're going to start to see, because you got to pull people in. People don't like to buy at all-time highs and stuff like that, so you got to suck them in. And so that's how they're going to do it. So it's definitely going to be a very interesting week to wrap up February and move into March. Let me know any predictions you have or any earnings you're playing and stuff. If you got anything out of it, hit that like and subscribe button. Really appreciate it. And I'll see you guys tomorrow.